Welcome everybody to another webinar presentation by Sunbelt Business Advisors here in the Greater Bay Area. Today we're hosting a webinar called SBA and PPP Loan Guideline Updates with our host, Scott Cisneros. Please do submit your questions at any time, and if we don't get to it during the presentation, we will at the end. So thank you for joining us. Again, my name is JC Meyer. I'm the operations manager here, and I'll turn it over to Helen.
Thank you, JC. Good afternoon, everyone. So welcome to our February webinar. And as JC mentioned, this month's topic is on SBA and the PPP loan updates. So CARES Act 2 actually came out at the end of last year, as everybody probably already know. But because what's going on in Capitol Hill and the new presidency, a lot has been on hold and changing from time to time. So we're really delighted to have Scott here today to give us some updates. And before we go into Scott's presentation, I'd like to highlight some points about Sunbelt Business Advisors and why you should choose Sunbelt. So Sunbelt Business actually is the largest business brokerage in the world. At any given time, we have about 3 billion business listings. And also we have the highest number of high value listings, which usually is over 1 million than any other brokerage. And also we have the largest proprietary listing and buyer database that will help the transaction go more quickly and smoothly. And also Sunbelt has been around for 40 years. This office in Bay Area has been serving California about 20 plus years. All of our agents in the office are quite experienced, and quite often they are former business owners or corporate executives that have, sharp experience and the skills in dealing with business transactions. And also we align our business's skills and experience to your unique business value, so to make the transaction go faster. Okay. So with that said, I'll introduce Scott. So Scott actually has been working with our office for a couple of years and helped with many of our transactions. And Scott is the VP and one of the senior SBA commercial loan officers at Union Bank. So Union Bank probably is one of the best SBA lenders out there. So we're really delighted Scott can join us today. So Scott, I'll turn it over to you.
No, thank you, Helen. Yeah, one of the things with, I think sometimes the confusion around SBA is there's many different facets of SBA, and does your bank like that? For me, I'd say probably 95% of my transactions are business acquisition transactions where we're financing the purchase of the business. So the bank likes those. Been in the banking industry for a little over 15 years or so, and then more specializing in SBA for the last 10 years. Moved over to Union Bank from a smaller shop to kind of get that bigger bank reach, and so it's been a great transition. Last year just funded $20 million in loans, which for me was a big jump up from what I had been doing in previous years. And that's basically just the bandwidth that Union Bank has, the pricing, and just appetite for deals. And so, again, my goal is always just to be a resource for the borrower. SBA is a complicated process that changes continually and always being updated, always being moved around. And so, my goal is to help you get the transaction done and offer you suggestions on how you can do that. So that's where we're coming from. Do you want to go to the next slide? So today we kind of wanted to give you an update on the PPP, the CARES Act. Again, Helen and JC had mentioned it. That's kind of some of the confusing things with SBA is things are kind of always changing, and especially with a change in presidency, I think you're going to see more changes coming. So kind of a little bit of a recap. So last year was the first CARES Act. And it was, for new business purchases, they were offering, the SBA was offering 6 months of principal and interest payments paid for loans. And that was ended basically on September 28th of 2020. And so, obviously busy time for banks in general. Got as many things as we could get funded that day, taken care of. The loans approved before 327, different programs that, SBA is working under the Community Advantage Pilot Program. There was 2 months of loan payments offered by the SBA for that. Some of those could be used to cover the past due payments. And then this one, the 9,000 is for the new setup. Last year there was no cap on their how much they're paying back. But again, the SBA has now gotten a little bit more specific on certain industries that were affected more by the pandemic. And so they're offering an additional 3 months of loan payments for those industries kind of hit hardest by COVID. Go ahead and switch it. So we kind of now move into, I guess you call it CARES 2.0, where, looked at the environment, looked at what was kind of going on in the economy, and put through some legislation that were in some ways similar to what happened in 2020. Again, new business acquisitions, new SBA 7A loans and 504 loans. Right now, currently, from February 1st through September 30th, and this is where some of the changes come into play. They initially were going to give 6 months of loan payments and waive the guarantee fee this time. SBA kind of went through, and I want to say early this week, kind of decided at this point they're not going to have enough funds under the current appropriations to be able to do the 6 months and have cut that back to 3 months payments. This is where the $9,000 cap comes into play this time around. So no matter how big your loan is, you do cap out at $9,000 a month. But they are waiving the guarantee fee. So sometimes on larger requests, that fee can be up to 3.5% of the loan. And so you can be talking about some substantial money at that point. Most lenders, Union Bank included, would normally, finance that into the loan. But, if you can have your loan amount smaller, then obviously your monthly payment's going to be smaller. So that one is continuing on at this point. Hope at this point now is, I'm sure everybody's seen in the news, there is a new piece of legislation that's working its way through Congress, a 1.9 trillion. Yeah, I think trillion. Lots of zeros there. That may have some additional SBA funding involved with that piece of legislation. So again, I would think, kind of keep your, ears open that, again, there may be some changes coming when that thing finally makes its way through Congress and then, hopefully makes it into law. Can you switch that, JC? It's not working for me.
Scott?
Yes.
Do you mind me just asking something really quickly? So
sure.
Before that new legislation comes into place, if they get the SBA loan approval now and get the 3 months free payments by SBA, would they be eligible to get more free payments if that new legislation offers that?
But yeah, potentially. I mean, when we first started out the year, it was going to be 6 months, $9,000 cap, and everything was going to go for that. Again, it just recently got the news saying, hey, we just don't have enough, enough to be able to do that. So that would be my hope at this point, that if in the new legislation there's going to be additional SBA funding, that they might be able to take that back from 3 months, go back to the 6 months. Because I know, especially with a new business owner, great way to kind of build up working capital when you've just purchased a new business and, not having a payment for, 6 months.
Sure. Okay.
Yeah.
Thank you.
So, okay. And again, there are many different sub-programs that the SBA offers. Probably the most common you've heard of are, the 504 and the 7A, community advantage loans and the micro loans. Again, similarly, last year they were paying, 5 months of loan payments by the SBA. They can catch you up if you're past due, because last year's legislation, it covered not only new loans, but existing loans. So anybody who had an outstanding SBA loan was getting, some relief at that point. And so, with the community advantage loans and the micro loans, you were able to go back and catch you back up. So if you had fallen behind because of the pandemic, they'd kind of catch you back up with that one. All right, JC. And again, some of the benefits already discussed under the CARES Act too. Guarantee fee is being waived this round. I think a lot of people don't know that the SBA is a self-funding program. They don't receive money from the federal government. So the guarantee fees goes towards running the program, covering any losses, doing that sort of thing. Another, I think, important point to kind of point out is SBA did increase the guarantee fee for banks to 90%. Normally on a 7A, it would be 75%. So thought process around this would be obviously give lenders a little bit more comfort. They've got a higher guarantee, and that would allow them to continue to either lend more aggressively or just stay out in the market where you've got some banks that have started kind of pulling away. The 90% guarantee would kind of help keep them out in the market and keep them lending. Don't confuse this with the injection required by a borrower. So the 10% injection, 15% injection, whatever a borrower is requiring for injection into the request doesn't line up necessarily with this 90%. The 90% is just between the bank and the government on what they would be covered if the loan were to go bad. So I think sometimes people get confused on that one, thinking, hey, if I put down 15%, then I'm fully collateralized. Two different things. So again, the increased guarantee will run through the end of September. So good stuff, and keeping banks out there in lending.
So Scott, just a couple layman questions from me. So this guarantee fee, this is something traditionally that SBA would collect and then provide it to the bank so that you guys or it would mitigate your risk of offering the loan?
So the fee goes directly to the SBA. So again, the fee is what the SBA collects to help run the SBA program. The guarantee is what the SBA is offering to the banks to say, hey, in essence, especially with, business acquisition requests tend to be a little bit more risky. As you well know, normally lots of goodwill involved with them. You're not, borrowing dollar for dollar collateral. You're buying the going concern. So there's a lot of goodwill increase in them. And so this is kind of why a bank would say, hey, we'll take on this riskier transaction. We'll do it because we're going to get the 90% guarantee. And again, traditionally it's 75%. Again, with the COVID kind of still going on, they bumped it up to 90% to, keep banks out there, keep them lending.
Got it. Okay. All right.
I'll go next slide. So the PPP program, I'm not even sure. I've heard of PPP 1.0, 2.0, 3.0. I'm not sure where we're at right now on whether 3.0 or 4.0. We started accepting new applications this round. We're started on January 13th of this year. That runs until March 31st of this year, at least this round. Kind of some recent changes that just happened on Monday to make sure that the SBA is servicing the smallest of the small businesses. They have put a temporary freeze on any PPP applications with businesses with more than 20 employees. So they've really scaled down. So you've got to have less than 20 employees. So right now the freeze started yesterday and will run for 14 days with no applications for PPP being accepted from businesses larger with more than 19 employees. I can't speak for other banks. I know for Union Bank, we are continuing to accept the applications, but we can't submit them to the SBA until after this 14-day period if you have more than 19 employees. So again, sometimes that's the confusing things, especially with the change in presidency. Taking a different tack to this one, and the thought process is, let's make sure the smallest of the small kind of get in there and have their time to get access to these funds before anything gets in there, and then everything will kind of kick back into gear at that one, and we'll run through the end of the program in March 31st. Again, eligible use of funds on this one are payroll, mortgage interest, rent, utilities, group health insurance costs, any worker protection costs related to COVID-19, uninsured property damage caused by looting or vandalism in 2020, and certain supplier costs and expenses for operations. What we're seeing in the second round, this one we'll call it the second round, much more guidelines around. You've got to be able to show that your business was actually affected by COVID. In the past, you just had to sign something saying, yeah, we were affected. Now they're saying, no, you've got to produce proof and show that there was a drop in revenue, a drop in profits from 19 to 20, and that and in fact you've actually been hurt by the pandemic. Switch over.
Oh,
next one. Sorry, JC.
No, it's okay. Hey, quick question, those guys. So
sure.
So to prove that, what type of documents do you need to provide? I mean, balance sheet, profit and loss tax.
Yeah, I would say at this point you've got to show at least 1 quarter of down revenues from 2019 to 2020. So yeah, I would say a quarterly a P&L, something like that would be able to show, hey, that we actually were affected by it, because unfortunately or fortunately, there was a lot of businesses that weren't affected by it. They were running normal and had their hand out, got PPP loans, and you can't even hold it against them at this point. They're running their business, but weren't necessarily always affected by haven't been affected by COVID. So again, maximum loan amount 2.5 times average monthly 2019-2020 payroll, up to $2 million for borrowers. In the accommodation and food services, 3.5 times average monthly 2019-2020 payroll costs, up to the $2 million again. Again, they've got specific NAICS codes that they're kind of zeroing in on, that they feel we're far more affected by COVID and the pandemic than something else. So next one, JC. Those who may qualify, if you previously received a first draw PPP loan and will or have used the full amount, and hopefully you've used it for the authorized uses, you are qualified for PPP Round 2. Again, PPP Round 2 a little bit more stringent, and you've got to be able to show that your business has actually been affected. And I've talked to a number of businesses that are like, hey, can I get PPP loan number 2? Were you actually affected by it? No. Then it popped you out of that, being able to qualify for it. Again, you can see some of the restrictions increased, no more than 300 employees. And then again, you've got to be able to demonstrate at least 25% reduction in gross receipts between comparable quarters in 19 to 20. So again, I think the government's kind of looked at this and gone, hey, let's really kind of zero in on businesses that were really affected by this, industries, and then really you can see with the change that kicked in on yesterday, zeroing in on the most affected, smallest businesses are hit hardest by some of the pandemic. And so again, that's what's causing the break for the next 14 days.
So Scott, a quick question.
Yes.
Sorry, a quick question on the first point. So for to show that the PPP money was used or will be used for the authorized purpose, is that just simply a statement from the owner, or is there some kind of evidence to be submitted?
I mean, I'd say the evidence would be showing your bank statements for the money goes into the account, the money's now gone from the account, and that you've used it for the purposes intended. I think that's been some of the hard part on the first wave of PPP. There was such a demand for it that no banks out there had the capacity to be able to handle the volumes that were coming in. I think Union Bank on the first round did something like 14,000 loan requests, and that's something that we do in like a 5 or 6 year period, and we did it in a matter of months. And obviously the big boys, Wells, BofA, JP, did even more than that. And what you're kind of seeing even towards the end of the first round of PPP, definitely in the second round, was everybody going to portals because there's not enough employees in the world to be able to handle this type of loan volume. And so most of the people have kind of been taken out of this, at least on the inputs phase of it. Everything goes through the portal, and then the forgiveness is going through the portal as well. And then it cuts down on the processing time because, again, you can only have so many employees, and you're looking at hundreds of thousands of loans. It's hard to kind of keep up on this one. So I think with automation, that's greatly improved turnaround times, speed, because these things do take time. They're loans. You got to document them, and you got to go from there. So
Okay.
Go ahead, JC. Again, your time, at least for this version of PPP, you've got from January 13th through the end of March 31st. Easiest way, honestly, is if you've got a relationship with a bank, with your business account, I would say go through them first. The same rules apply to banks, the KYC, know your customer, all of those same lending requirements are still involved with these. So it's sometimes hard when you had people trying to switch banks and go over, to somebody else. We had to get all that information. A lot of those kinks have been worked out, so you can go to, I know Union Bank is accepting applications for, non-account holders at this point. We'll just get the information that we need for KYC through the process, and I think a lot of banks are doing that as well. Again, some of the streamlining and automation has helped kind of clear some of that up. The amount of forgiveness, payroll costs over the 24-week period, starting from disbursement of the loan. Some of that you saw in the first round increased. It wouldn't surprise me if that continued to increase, giving people the time to be able to get that out there, get employees back and get them working again. And then you can always elect to use the 8-week period to receive the SBA loan before June 1st of last year. So started out with 8 weeks, then they realized it just wasn't enough time, went to 24 weeks. Again, I'd have to think with this new legislation working its way through Congress that there's probably going to be, PPP 3.0 coming out again, until we can get, everybody back out there, back to work, and, the vaccines more widely spread out. So go ahead, JC.
Scott,
Yeah.
Another thing, just want to clarify. I think SBA mentioned that to get the forgiveness, as long as 60% of the funds were used for payroll, did they include the rent or something there? I think it was just the 60% of the funds used for payroll, then you're eligible for the full amount of forgiveness, right?
Yeah. So again, I think that the biggest play here was they wanted to get people back to work. They wanted, especially in the beginning where I think nobody thought this was going to go as long as it has. The thought process was, hey, let's get people so they're ready to go, because, as a business owner, you lay off all your people, the longer they're gone, the less likely you are to get them back. And it takes you time to be able to ramp back up and throw your doors open again. Thought process, I think, in the beginning was, hey, this is going to be a short-term thing. We will keep things going as it's come into play now. Obviously, we're coming up on a year that this has been going on, so that's not necessarily been a short-term anymore. But again, the main thought was keep businesses open, keep people getting paid, and then having the ability to jump back in as quickly as possible. When this thing kind of got tamped down. But again, I think nobody was anticipating it was going to be a year and continuing on at this point.
Okay, thanks.
Go ahead, JC.
So, quick question, another layman question.
Sure.
So the freeze period you were talking about earlier, that was it 2 weeks? You said it's a freeze period.
Correct. Yeah, it started yesterday.
So does that freeze also apply to people that previously had PPP loans that are looking for the second, or do they get that pass to go for a second PPP loan because they've already received one?
No, as far as I understand it, it's freezing everybody. At this point, again, the goal is get the smallest of the small businesses, get them bumped to the front of the line. Let's get them run through the system. Let's get some money out to them as quickly as we can. Because I think some of the, the news I've listened to is you've got the very smallest of the small raising their hands going, dude, I just don't have the technology. I don't have the wherewithal. I'm trying to hang on as best I can. And, I just don't have my CPAs and my CFOs out there being able to do this for me. I'm a one-man show. And so, I think the Biden administration was saying, hey, let's give these guys a chance to jump in there and get what they can, while they can, assuming, again, limited amount of funds, at least on this version. And so let's get them back to the front of the line. So yeah, as far as I understand it, it's frozen for everybody at this point. Every lender may be doing it a little bit differently. Again, we're still accepting applications. We're just not submitting them. I don't know what some of the other lenders are doing at this point. They may have just frozen everything until they can get through this one. Because again, depending on the bank, they've been much, much more impacted by, PPP, some banks more, some banks less.
We had a question that came in. I think it's relevant to ask now because we were talking about this prior to the webinar. Second round PPP loan and forgiveness money would help the business owner of 50 employees in this scenario. Understand, as a seller, I may need to put unforgiven loan amount into escrow awaiting forgiveness. What are the downsides of applying for second round PPP loan if I'm selling my business in the next 12 months?
No, fantastic question, because this unfortunately has been, as a lender, outstanding PPP loans on the selling business have become the bane of my existence. Before, I want to say it was November 2nd, what you used to be able to do is in the middle of a transaction or at the end of the transaction, if you had an outstanding PPP loan, we would just take those funds, you held them aside from the proceeds. Once you then applied for the PPP loan, if it was forgiven, then those proceeds would be released back to you. On that date, SBA changed the rules and said, no longer can you do that. So right now, what the rule is, if you've got an outstanding PPP loan as a seller, to complete the transaction, that loan has to be either completely forgiven, and you're able to document that. I've seen a couple of them that have happened where you get a nice little email from your bank that says, hey, loan has been forgiven. Great. That's all we need. And we go from there. Or you've got to be able to, I think per the question from, you've got to be able to have whatever outstanding PPP loan has out there. You've got to be able to take those funds and either put them in a bank controlled account with the bank who's got the PPP loan, or in some cases, you've got to open up a separate escrow account for the same purpose of being able to house those funds, outside of the transaction. That would then allow the transaction to continue on. You sell the business, your loan is still outstanding then with that lender that gave it to you originally. Those funds in escrow are being held there for you. With that said, once the PPP loan is forgiven, great. Your bank would then release those funds, or, for instance, let's say they didn't forgive all of it. Whatever they didn't forgive would probably be then taken from those funds, and you'd get the balance of that. So, I'm kind of telling all the brokers that I deal with and all the sellers is, if you've got an outstanding PPP loan, we got to know about it upfront. You've got to either be applying for forgiveness immediately while we start this transaction, or if you've got the funds to be able to impound them, you've got to know that that's going to be one of those requirements. Right now, banks have 60 days. When you submit an application, they've got 60 days to be able to go through the transaction and approve it on their end. Then they forward it on to the SBA. The SBA's got an additional 90 days to be able to look through that and make sure they make a determination and come to a determination. So they're not taking that long, but if you're in the middle of a business transaction, you're trying to sell your business, you don't want to add 5 months to the end of that transaction. That can kind of be a deal killer. So again, what I'm telling everybody is, you got to get going now, or again, I might second guess getting that second PPP loan if you really are, hey, in the next month or two, I'm going to sell my business. It complicates it for sure.
So Scott, not that anybody would really do this, it's probably rare, but are PPP loans assumable by a new owner?
Potentially. I don't see why they wouldn't be, other than the fact it would probably be depending on what type of transaction you were doing. If you're doing an asset purchase, which most of the deals I deal with are asset purchases, now that loan is to a different entity. That entity is now no longer going to have any assets that's being sold. If you're doing a stock sale, I could see that more likely. I honestly, I've not seen it. I wouldn't even want to dive into that world of trying to get a PPP loan transitioned over. I mean, I'm sure it's possible. You're just talking, you're adding some, I'm thinking months to the transaction, because again, I love SBA. I make my living off SBA, but they just don't move very quickly, and they're always overwhelmed, as everybody is with some of these things. So, one of the benefits of dealing with a preferred lender is we don't ever deal with the SBA, and then that's how these transactions move as quickly as we do. The only time we really deal with the SBA is at the very end of the transaction. We get a loan number and we go from there. But there is no approval on their end. We know what their guidelines are, and we're underwriting to those guidelines. And so anytime you've got to go what's called GP, which is general processing, it's a slow process. You send it to an email and you wait, and it's just one of those things that, if I've got deals that have had to go GP, the hair on the back of your neck stands up, because you just don't. It's not a fast process.
So Scott, on the related topic, not the PPP program, but for the idle loans, can the idle loans be set aside in escrow, or has idle loan be paid off completely?
As far as I'm seeing right now, idle loans would have to be paid off in escrow, because again, you now have a loan out to an entity that in essence doesn't exist anymore, or at least has no means of repayment. So I don't see them keeping an idle loan around to a business that isn't producing revenue anymore, it's been sold. From the way Union Bank is handling them, yeah, they're being paid off in escrow. They're considered an outstanding loan, and they're being paid off in escrow.
Okay.
One more question for you, Scott. So earlier in the presentation, going back to the freeze, you mentioned that it was, and the notice you sent us the other day said something about there wasn't enough money through the first bill or whatever that they passed, right? So is the freeze contingent on new legislation passing for a new budget for the PPP program?
No, it's based on what's out there right now. So, and that may be why they initiated the freeze. This was the first time where SBA's come out and said, hey, we think we're going to run out of money, and then we're changing this from 6 months down to 3 months. I'm assuming in the same vein, they're worried like, hey, in case for some reason we run out, let's get the smallest businesses in here, pump them to the front of the line, and let's make sure that they're taken care of on the chance that, again, we may run short on funds. I don't know exactly what the legislation is that's coming or when it's going to be approved, but my gut would say there's got to be some additional funding coming out on that one. And I think, to Helen's point, I would assume that they would be able to bump that back up go back to, hey, we got more funding. Now we're going to go back to the 6 months again and go from there. And so they give total guess on my end, but it makes sense to me that that's what it would be.
Okay,
All
that's great.
right,
Okay.
Next slide.
That's it.
Cool. So we come to the end at this point. Any other questions, JC?
We haven't gotten any questions in the Q&A other than the one that I mentioned earlier. So folks, if you're in right now and you do have some questions about the content that's just been discussed, please share that with us now.
And I would go ahead.
Scott, just to have a quick suggestion, maybe you can share with us what kind of trend you see in the new SBA loans. which industry might be getting more, approvals or, kind of something like that?
Yeah, I think a lot of this is going to be based on lender appetite. You've got lenders out there who were full on PPP or SBA lending. PPP has just swamped them because they've got smaller shops and they've kind of transitioned away from it. You've got, I think a lot of people, although you may have an SBA guarantee, you still have a lending appetite that certain banks have or don't have. And so whether you give somebody unless you're given a 100% guarantee, there's certain segments that I think scare banks, and they're normally right now going to be the ones that are probably hardest impacted by COVID. Restaurant industry for sure, you're seeing that it hit hard, and it's kind of that double-edged sword where if you've been in banking long enough, and as a business owner, when you want money, you can't get it from a bank, and when you don't want money, they're running to your door to give it to you, and so that kind of always is that catch-22 with businesses. For speaking for us, and a lot of my buddies are SBA lenders as well. SBA is a cash flow lender, and so if the cash flow makes sense, that's probably 75% of the transaction. The other 25% is the new owners or ownership in there. I'm doing a couple business restaurants right now. They were unaffected. If you're selling pizza or some walk-up stuff, you're doing fine. In fact, your revenues are up. The bigger restaurants you get, the more sit down are the ones that have been affected more. Definitely more affected as you go to Southern California versus Northern California. You had counties up here that didn't shut down. I'm in Placer County. You wouldn't know anything was going on. We're in the purple, but Placer County, you can go sit down in a restaurant. You can go eat in a restaurant. And I talk to business owners. They got a stack of citations, but it's either that or go out of business, and so they'll take the citations right now. And so I've heard though from my friends in San Francisco, San Diego, LA, that's definitely not the case. I mean, you have the sheriff standing outside your business going to arrest you. Just very, very different from Northern California to Southern California on how this thing has been handled. And so again, businesses in those areas have seen very, very different P&Ls and balance sheets. The hardest thing that I see is you got a business owner that was maybe looking to sell, has 2019 numbers, and kind of wants to pretend like 2020 didn't exist. Well, 2020 existed, 2021 is still going on. And so if you got a business evaluation based on your 19 numbers, you're either going to have to run that business until you get back up to those 19 numbers or look at taking some sort of a haircut. Because from the buyer standpoint, well, who's going to take that risk? Oh, it's going to come back. I don't know when it's going to come back. No one knows when it's going to come back. And so again, sometimes those are hard conversations that I have with other business brokers and with other sellers, because they have that number set in their head. 2019, you kind of missed the boat there. So I think you've got to come at that from a logical standpoint, that the bank is going to look at 2020. We're going to look at month to month. I mean, if we get a business that's right there, I want month-to-month P&Ls from 19. I want month-to-month P&Ls from 20. I want to see, look, we closed in March and April. Then we're back open in June, July, August, and we started ramping back up again, because we do have the ability to say, hey, these numbers in 2020 are down. They were closed for 2 or 3 months. Now, if we look at this based on 7 months versus 12, the numbers don't look as bad anymore. I would say for restaurants, we're looking for experience all day long. And again, I can only speak for Union Bank. You can't have a tech guy that thinks it's fun to own a Subway come in and take over a Subway right now. Not going to happen. They're just not going to finance it. Now, if you're a Subway owner, you've got an business owner experience, and you're looking at this as, man, I got a fire sale going on here. I can pick up some businesses and this will be great. Those are the ones that we're looking to finance. So I would say it's not so much that, restaurants are we're not touching them. We are, but it's got to make sense. And my buddies out there are kind of saying the exact same things, looking much, much more at the sellers or buyers' experience. What do they bring to the table? we want you to be able to know that business backwards and forwards. And so you can't come in and go, I got a great manager. What if the manager quits? Now you got a business you don't know how to run anymore, and you have not a clue on what levers you got to pull to be able to do that. So I can honestly see when we pull out of this, and again, I'm a BDO, so I'm an optimist to my core. There's not a deal that I don't think I can do, but when we see I think widespread, vaccinations being out there, hopefully by end of summer, hopefully sooner than that, I think you're going to see a lot of businesses hit the market that they survived it, but they're tired and they want out. And there's going to be a great ability for people to come pick up some great deals and then go from there. But again, depending on the industries, if you're selling a business or looking to buy a business, anything to do with home ownership, fences, pools, lawns, remodeling, those businesses just going gangbusters right now. I mean, you're 6 month, 8 month list to be able to get in there and do that. I looked at buying a spa. Get on a waiting list. They're 10 months out right now. You can't buy a spa. You can't do it because I think people are like, I'm going to be stuck at home. I want a spa. They can't keep up. And so a lot of those businesses are like that. So, some have been devastated and some have been not. But I think when the restaurants can fully reopen and go, you're going to have some good stuff going on there where you got a seasoned business owner who's got some cash on the side. Time to jump in and pick up some stuff. So,
speaking of reopening, Scott. So yeah, a lot of businesses. There are some businesses that are thriving with the whole COVID lockdown thing, but with the businesses that are distressed because of the COVID situation. In the future, when we do open up, how long is it something that you think that lenders are going to look at and say, okay, this business now, since we've been open, is now back on track? 2020 was just a fluke year. Is it going to be something possibly in the future because of a situation that 2020 can be overlooked for lending?
I think so. I think as the farther we get away from it and the more we can get back to this is standard. We're back open again. This is truly what you're doing. And if we look at this on a month-to-month basis, you're back to your pre-COVID numbers. You've not done it for a year, but we can see the trend is heading back in that same in the right direction. I could see lenders kind of easing back up again, going, hey, this makes sense. This was a great business in 2019. No one could have, thought what was going to happen in 2020 would go as long as it did. We're back in 2021. We've got a good, quarter underneath our belts. Yeah, I can see lenders kind of popping back into it and going in and say, hey, I'm comfortable proceeding with this one again. Again, depending on where the guarantee is from the SBA. I would say also what I found in my time with banks in general, if a bank doesn't like a certain industry, it's because that senior credit officer or credit officer's taken a hit from it in the past. And, the old saying, elephants never forget, credit officers never forget. And so you could see that where if Bank A doesn't like restaurants because they got hammered in the COVID times, took a lot of losses, and okay, we're never going there again. If you had a portfolio that wasn't as stressed, you could see them going, we didn't take a hit on the restaurants. We'll go back into restaurants. Every institution normally has their industries they like or don't like. And again, no rhyme or reason, nothing to do with SBA. For us, we don't like hospitality. If it has a bed in it, we're not touching it. I have no idea why. I've not been able to get a straight answer for it, but we won't touch them. I got my fellow brethren, love hospitality. We'll do it all day long. Can't, give me all you got, Scott. And so, again, it's just that bank's appetite for it. And so I could see coming out of this, depending on how each bank got hit, you'll see either a rush back to it or maybe, again, more of a, intrepidation of wanting to go back into it because they do have a portfolio right now that is sitting in SAM with restaurants they're trying to work out stuff with and go forward.
Yeah, that's great insight, Scott. One thing, go back to the PPP. I remember one thing. I think I read somewhere this saying the lenders or maybe SBA requirement is to simplify the forgiveness process, especially for the loans under 150,000. So have you heard about that?
Yeah, and I think that was sometimes the bank's hesitation to throw open the forgiveness portals, because obviously a lot of work goes into these things where we've collected all the information, we deem it to be, yeah, we approve this one. Now we got to send to the SBA and they got to do the same thing. And so there it kept on being the rumors out there. Well, it's going to be anything under 250,000. It's going to be 150,000. And so as far as I know at this point, there is something out there 150,000 and below. Very, very simplified, forgiveness. And I think that, again, that was been the lender's hesitation. They're throwing open their forgiveness portals because why go through all that work if you're going to have a simplified one page, you're attesting to that you were affected by it, and very limited documentation kind of going into it to be able to get forgiveness. So, as far as I know, that is still the case at this point. It is 150 or below. Very streamlined forgiveness application, very minimal requirements for you to be able to prove and going from there. Because again, it was a nightmare when this was rolled out. Now the forgiveness is going to be as much so, if not worse, with people trying to. My business made it. Now I'm ramping back up and I'm busy. When do I have time to be able to now send in all this information to get this thing forgiven and kind of go from there? So I would say, Helen, that's going to be an ongoing change, and I could foresee it increasing from 150 to 250 to where it's like, let's get past this. Let's get this thing forgiven. You made it. You survived it. Great. Why are we going to burden you with all this thing, the additional paperwork to be able to prove your forgiveness? You survived. That proves it, so something like that.
Okay, so you're saying this is not casting stone yet, so it's still ongoing, changing policy.
Nothing with SBA is cast in stone. This one is, I think, the EIDL program. I think a lot of people don't realize that the EIDL program, that's an ongoing program. The EIDL program never goes away. It just ebbs and wanes depending on what's happening in the country. So if you have a flood somewhere, EIDL is over there and they're giving loans to small businesses to be able to do that. If you've got, with Texas and their freezes, EIDL loans will be going out there for those business owners to be able to kind of ramp up from that one. So EIDL never goes away. You just kind of don't hear about it because it depends on what part of the country you're in and where SBA is kind of going to help with that one. The PPP, again, that was part of the problem. That thing was rolled out so quickly, so many big numbers on it. Lenders were doing their best to be able to keep up with it, but it was moving so fast. So even when I read some of the legislation came out when on the PPP 2.0 or CARES Act 2.0, I can speak and read English, and I couldn't understand that one at all. And so they give that to the SBA, and then the SBA deciphers what does this mean, because they don't rewrite a whole new bill. They just tag on to what was already written. So in some of it, they're like in section 2.0, this supersedes 3.0 to 5.0 to see. They didn't tell you what that was. So you got to be able to go back and find, okay, CARES Act 1, here's where it changed to CARES Act 2. What does this mean? And it's all in lawyer speak. And it's like the wherein and the thereto and the hereofs and commas. And I read it and thought, I don't know what they're saying here. And I'm an SBA lender. I don't know what this is saying. And so I think that's been some of the frustration is, great, President signed it. Why is this taking so long? Because this is not English.
My guess is that there are probably more than 10 lawyers, maybe hundreds of lawyers working on that piece of agreement, and they all disagree with each other.
Well, and in any kind of transaction you get, whenever anybody lawyers up, oh man, time is going to increase and expenses are going to increase. And so again, I'm not, the lawyers, you are great people. I understand why you have them, but you can't protect yourself 100%. So if every side is, we have to be 100% protected, that agreement is going to be 1,000 pages long, and every what if or could be is going to be in there. You got to have some some trust a little bit, and you got to know yourself, and you got to know the industry well enough to know it's like, hey, there's going to be some risk here. It's an inherently risky transaction with a business acquisition, but you cross your T's and you dot your I's the best you can. You move from there. But yeah, I mean, so many attorneys are working on these things, but I think what I would add as anybody is you got to have patience. I understand when money's at stake, patience goes out right out the window. I mean, when I'm trying to close a deal, I have no patience. Time kills deals. You've heard that saying. And so again, that's just a frustrating part of the industry. But, having read the legislation going, I have no idea what this says, and I deem myself a pretty intelligent man and I don't know what this is saying. But that's why from the president's signature, it takes 2 weeks or so, if not longer, for the SBA to get this, decipher what this is saying, and then roll that out to the banks to be able to say, go and do this. And even from the bank's point of view, we get it. How does this fit in with our already written credit appetite and our credit programs and, our credit, what does this mean for that one? And so it just takes time. And so I think everybody's doing their best. Great time if you want to get an SBA loan. Right now on the 7A, especially on real estate, I can compete head to head with the conventional guys now and give them 10% down and a rate that, 25-year fix. I can do it. Normally it was that guarantee fee that kind of pushed somebody out between conventional and SBA because, in a $2 or $3 million transaction, you're looking at a $50,000 or $60,000, guarantee fee. That being waived, now, SBA is incredibly aggressive, terms of financing. So we're busy. We're busy.
So what's the upper limit of the loan amount you can go up to?
SBA is $5 million. So
Okay.
Depending on kind of which transaction you're looking at, if you're doing a 504 and it's a real estate transaction, we can go a little bit above 10 million because in essence, on the $10 million transaction, borrower is going to come in with 40% of that, the first position is going to be 40%. Buyer is going to come in with 10%. The 40% that's left over is going to be that 5 million the SBA is considering on it. In those type of transactions, the banks really look at that as a conventional kind of deal. We're doing a deal that's really 50% loan to value. There is no guarantee on a 504. We're just in first position on a 50% loan to value deal. That's basically our guarantee in a 504. The 7A is where we got the guarantee that pops into it. And again, 90% right now. But again, not to get too deep into the intricacies of an SBA program, because again, every lender looks at these things differently. SBA's bottom floor is 10%. Doesn't mean you're going to go to a lender and they're going to do it for 10%. They might want 15% or 20%. Again, that's their appetite for that transaction, not SBA. And so for us, we tend to stick pretty closely with the SBA guidelines. Other than some of the industry, as I discussed, we just don't like. SBA eligible, we just don't like them. And again, that's more of a credit appetite than SBA. Depending on what you're looking at, my job is get you to a lender that will do that. Again, if it's hospitality, nothing wrong with hospitality. It's just not going to be a Union Bank thing. I got buddies all over the place that jump at the chance of doing that. Again, gas stations are another one we don't like. Get nothing wrong with SBA. Totally SBA approvable. They're all good. We just, again, I'm assuming my senior credit officer had some sort of a dirty transaction at one point and said, no, we're not doing them anymore. But again, that's where just, again, how much a lender is looking to put into that is not necessarily SBA. It's more the lender's appetite where they'll say, hey, I'll do a gas station, but I want 15% down on it. I want 20% down on it. That's just their appetite.
Guys, I just want to put out there a 5-minute mark. We've got 5 minutes left. And to the audience, I do want to say the reason we invite people like Scott to our webinars is because we want to provide a resource that we already have for our knowledge, and we want to share that with you. And so as you look at the screen, please feel free to take down Scott's info, phone number, and email, because as you can see, Scott is a really knowledgeable person on this stuff, and he researches it on a daily basis. And as you can see, things change all the time. So as a follow-up to this webinar, for more information, you can always contact Scott, and definitely can contact our office as well, because our agents are also versed, probably not as well as Scott, but we're learning this stuff along the way as well. So just putting that out there. And with that, we got a few minutes here to wrap up. So any last questions, please ask now or forever hold your peace.
Yeah, I'd say that the biggest thing is find a bank you're comfortable with. You know, these transactions, especially business acquisition, they're stressful. We and I told the borrower this a couple of days ago. We have to be buddies. You have to really like me. You're getting married. You're in the honeymoon phase of the transaction when we're first starting out. If there's any sort of rub in the very beginning, it's just maybe not a good transaction. Our personalities don't mix. You don't like me. That's good. You've got to find somebody you like, because this will become stressful. They all do. And towards the end of the transaction, you're getting to the nitty gritty of things. You're sick of me asking you for bank statements. You're sick of this. You're sick of that. You're just, especially towards the end, they're never my favorites either, because you're crossing your T's and you're dotting your I's. But going into a transaction, if you got a banker you love, deal with that banker. You know, a lot of people will go with rate and term. That's always important as well. But you got to have somebody that you feel you can trust, has your best interest at heart. You know, and a lot of times I'll tell people, dude, SBA is a great program. You have other options. If it's a smaller transaction, you can do a home equity line of credit. I would tell you to do a home equity line of credit all day long. Just easier, faster, cheaper. Everything is better. There's certain SBA guidelines that are set in stone. Certain are lender specific. And so I try and tell those big guys from the get-go, here are the ones that are set in stone. If you have outside collateral, we're going to want that collateral. You can't hold it aside. That's SBA kind of 101. Rate and term are always subject to lender. You know, that's where we compete. You know, SBA is SBA, but certain things, you know, rate-wise, term-wise, those are more lender, you know, specific. And find a lender you like. You know, if you got a lender you love, it might be worth it. You pay 0.25% more because you like them, you trust them, you want to deal with them. You know, rate and term aren't everything, but I would say you got to like them going into the transaction, because you don't like them in the beginning, you're going to hate them at the end. You know, it's a stressful time for everybody.
Yeah.
Okay.
So again,
great.
my goal is to be a resource. Again, no question is too dumb. No question is too, what about this? What about that? You know, if I can spend all day long talking to prospects, I will do that all day long. And so for me, email's the best. You know, phones, you know, I tend to lose voicemails and they just get buried. Emails are the best for me. So again, don't hesitate. I don't mind researching something and giving you an answer.
Yeah, our team can attest to that. You know, we ask Scott a lot of questions, and he gives a lot of free answers back to us.
Yep. So yeah, my goal again, you know, how can this work? How can this know? But again, I'd rather go into this fully transparent, because, you know, a lot of times, you know, I burst people's bubbles around this is my dream. That's hard, because you're dealing with a bank. Banks deal with money. And so if the numbers don't add up, I kind of have to wake you back up and shake you a little bit, because, you know, I'm going to be with you for the next 10 to 25 years. Let's make sure this going into this is a good transaction. And so again, sometimes, you know, I feel like I shatter people's dreams, but again, it's dollars and cents, and it's got to make sense for everybody. And so again, I'd rather do that to you now than now you got a big loan hanging over your head and reality hits you. So, you know, that's my goal in these transactions.
Excellent.
Okay. Thank you,
Awesome.
Scott.
Pleasure, guys. Appreciate your time today.
Yeah, it's been a pleasure. Thanks again so much, Scott, for joining us today, and everyone else,
You bet.
all of our participants and attendees today. Thank you again. And we look forward to seeing you all at the next webinar. Thank you for joining us, folks.